Today's top picks from Reuters Breakingviews. Thumping loss in the fourth quarter shows Deutsche Bank's profit targets are a long way off, and why the world's biggest brewer, AB InBev, is playing safe in buying back South Korea's Oriental. Well, with me is Reuters Breakingviews Associate Editor Quentin Webb. Quentin, thanks very much indeed for joining us today. Let's start with this Deutsche Bank. Profit targets looking a long way off. Explain what's going on here.
Well, this is a bit of nasty news from Deutsche Bank. They've been bounced into publishing their fourth quarter results 10 days early because, in fact, where analysts had expected a kind of decent profit, they've actually made quite a big loss. And so there are a couple of things going on here. On the one hand, they have some big restructuring charges, which are a kind of necessary evil to get the bank where it needs to be in a couple of years' time. And then you have these other things which are maybe less pleasant. So there is a kind of series of legal headaches in the background for the bank. That's probably the worst thing. And then another problem which investors will be worried by is the fact that the actual business of being an investment bank, of trading bonds, for example, is not a very profitable one at the moment.
So these, presumably we're looking at the longer term issues because they've got a plan in for the next year or so, but you're saying they might even be derailed from that.
They're still a long way from where they need to get to. Now, you might expect, for example, that there'll be some economic tailwinds in 2014 which will help them get some of the way there. But given where they're starting from and given the myriad distractions that the two chief executives face, the feeling within Breakingviews is that this will be a tough target to achieve.
And are we talking also about selling off bits? And we've been hearing about some banks getting rid of their commodities trading. Is there a restructuring of the actual size of the bank or its actual businesses in line here? Or is it just simply carrying on what they were doing, but you think they'll miss the target?
There are some assets that are likely to be sold. There's an asset called BHF, but it's not that the bank is going to be unrecognisably different. It's more that they need to be kind of leaner and meaner than they are at the moment.
Okay, let's move on to the other story about AB InBev playing. What you're saying, playing it safe with a $5.8 billion Korean reunion. Explain that this is a business that they've sold and now they've bought back for a lot more, but there's quite a bit to this.
It's a complicated story, but essentially today's AB InBev, which is the world's biggest brewer, was created in 2008 by InBev buying the company behind Budweiser. Now, obviously the timing was terrible and this deal closed very soon after Lehman Brothers collapsed. So very quickly the company's executives found themselves in the position of having to sell assets to pay down debt. They were uncomfortably highly leveraged for 2009. And so they sold a bunch of assets in Eastern Europe, in North America and in Korea. And in this case, with Korea, they had an option to buy the business back in a few years. Now, what this looks like is a sort of rather unfortunate bit of pawning where they've allowed a private equity firm to buy the business, make a 5 times return, which is a huge amount of money, even in private equity, and now they're buying it back. But the reason we say it's playing it safe is because there's nothing safer than buying an asset that you once used to own. You know exactly what you're getting into. And in this case, because they had a predetermined option to buy the business back, they're only paying a rather rational multiple of 11 times earnings before interest, tax and various other things, which by the standards of today's brewing industry is not punishing.
So the private equity, obviously, they've done extremely well, better than they perhaps hoped, but there is still some sense in buying this asset back because there is growth in this area in South Korea compared with the likes of Europe, which are absolutely flatlining.
Korea is quite an attractive market to be a brewer in. This company has more than half of the market, which is a great position to be in. It's probably not as big or as fast growing a market for sure as China, but set against that, it's quite profitable. So the margins you make on selling beer are pretty good.
Okay, Quentin, we'll leave it there. Thank you very much indeed for that with Quentin Webb of Breakingviews. Now, for more agenda-setting financial insight, watch our US Breakingviews show every day at 12:30 Eastern, 17:30 GMT. I'm Nigel Stevenson. This is Reuters.